Welcome to Financial Mastery Insights. Have you ever wondered how billionaires manage to keep more of their wealth while paying far less in taxes than the average person? It might seem unfair, but the reality is they're simply using legal, strategic tax tactics that most people don't even know exist. The ultra-wealthy don't play by the same financial rules as everyone else. From offshore accounts to investment loopholes, and even the timing of income, they leverage powerful yet completely legal methods to minimize tax burdens and maximize wealth. And here's the kicker. These strategies aren't just for billionaires. In this video, we're pulling back the curtain on how the rich navigate the tax system to legally keep more of their money, and how you can apply some of these principles to your own financial journey. If you're ready to rethink the way you approach taxes and wealth building, stick around, because what you're about to learn could change your financial future. Let's dive in. Number 1, understanding tax structures. To grasp how billionaires save on taxes, it's essential to understand the different tax structures they navigate. Tax laws can vary significantly for individuals compared to corporations. While individuals are often taxed on their income at progressive rates, corporations can benefit from lower tax rates on profits and various deductions that individuals cannot access. This distinction allows billionaires to structure their wealth in ways that minimize their tax liabilities. Another crucial aspect is the difference between capital gains tax and income tax. Capital gains tax applies to profits made from investments, and for many billionaires, this is a primary source of income. Understanding how these taxes work can reveal why billionaires often prefer to invest rather than rely solely on earned income, which is taxed at higher rates. Additionally, tax brackets play a significant role in how wealth is taxed. As income increases, individuals move into higher tax brackets, which can lead to a larger percentage of their earnings going to taxes. By navigating these structures wisely, billionaires can optimize their financial strategies, ensuring they keep more of their wealth intact. Number 2, utilizing tax deductions. Billionaires often have a keen understanding of how to leverage tax deductions to significantly reduce their taxable income. One of the primary ways they do this is by utilizing business expenses. Many billionaires own businesses, allowing them to deduct a wide range of expenses related to operations, such as salaries, office supplies, and travel costs. By categorizing personal expenses as business-related, they can effectively lower their taxable income. Charitable contributions also play a vital role in their tax strategies. When billionaires donate to qualified charities, they can deduct those contributions from their taxable income, which not only benefits the causes they support, but also provides substantial tax savings. This dual advantage makes philanthropy an appealing option for wealth preservation. Additionally, strategic investments in tax-advantaged accounts, such as IRAs or 401ks, can further enhance their tax efficiency. These accounts allow for tax-deferred growth, meaning that the money can grow without being taxed until withdrawal. By understanding and utilizing these deductions and strategies, billionaires can maximize their wealth while minimizing their tax liabilities, showcasing the importance of financial literacy and wealth management. Number 3, the power of investments. Investments are a cornerstone of tax savings for billionaires, and understanding the nuances between different types of gains can make a significant difference. Long-term capital gains, which apply to assets held for over a year, are typically taxed at a lower rate than short-term gains, which are taxed as ordinary income. This incentivizes billionaires to adopt a long-term investment strategy, allowing their wealth to grow while minimizing tax liabilities. Tax-efficient investment vehicles, such as exchange-traded funds, ETFs, and index funds also play a crucial role in their financial strategies. These funds often generate fewer taxable events compared to actively managed funds, making them a smart choice for those looking to preserve wealth. By investing in these vehicles, billionaires can enjoy capital appreciation with reduced tax implications. Real estate is another powerful tool in tax reduction strategies. Property investments can provide depreciation benefits, allowing investors to offset rental income and reduce their overall tax burden. Additionally, when real estate is sold, the profits can often qualify for favorable capital gains treatment. By leveraging these investment strategies, billionaires can effectively grow their wealth while minimizing their tax exposure. Number 4, offshore accounts and trusts. Offshore accounts and trusts have become popular tools for billionaires seeking to optimize their tax savings, but their use raises important questions about legality and ethics. While establishing offshore accounts is legal, it can sometimes be perceived as a way to evade taxes, leading to scrutiny from tax authorities. It's crucial for individuals to ensure that their offshore activities comply with international tax laws to avoid legal repercussions. Trusts, on the other hand, serve as effective vehicles for asset protection and tax minimization. By placing assets in a trust, billionaires can shield their wealth from creditors and potentially reduce their taxable estate. Trusts can also provide flexibility in how and when beneficiaries receive their inheritance, allowing for strategic tax planning. However, compliance with international tax laws is paramount. Many countries have implemented strict regulations to combat tax evasion, and failing to report offshore accounts can result in severe penalties. Therefore, while offshore accounts and trusts can offer significant tax advantages, they must be approached with a clear understanding of the legal landscape and a commitment to ethical financial practices. This balance is essential for sustainable wealth management. Number 5, tax credits and incentives. Billionaires often take advantage of various tax credits and incentives that can significantly reduce their tax liabilities. One prominent example is renewable energy credits, which are designed to encourage investment in sustainable energy sources. By investing in solar, wind, or other renewable energy projects, billionaires can not only contribute to environmental sustainability, but also receive substantial tax credits that offset their tax bills. Another valuable opportunity lies in research and development (R&D) tax credits. These credits are available to businesses that invest in innovative technologies or processes. For billionaires who own or invest in companies focused on cutting-edge research, these credits can provide significant financial relief, promoting further innovation while reducing overall tax burdens. Additionally, state and local tax incentives can offer further benefits. Many jurisdictions provide tax breaks or credits to attract high-net-worth individuals and businesses, especially those that create jobs or invest in local infrastructure. By strategically leveraging these incentives, billionaires can enhance their financial strategies while contributing to economic growth in their communities. Understanding and utilizing these tax credits and incentives is essential for maximizing wealth and ensuring long-term financial success. Number 6, the role of financial advisors. Financial advisors play a crucial role in shaping effective tax strategies for billionaires, who often rely on these experts to navigate the complex landscape of tax planning. With ever-changing tax laws and regulations, having a knowledgeable advisor is essential for optimizing tax efficiency and ensuring compliance. Billionaires understand that expert guidance can help them identify opportunities for tax savings that they might overlook on their own. Personalized financial strategies are another significant benefit of working with financial advisors. Each billionaire has unique financial situations, goals, and risk tolerances, and a tailored approach can maximize their wealth while minimizing tax liabilities. Advisors can create customized plans that align with their clients' long-term objectives, whether that involves investments, estate planning, or charitable giving. Moreover, staying updated on tax law changes is vital for effective tax strategy. Financial advisors continuously monitor legislative developments and can quickly adapt strategies to reflect new laws or incentives. In essence, the expertise of financial advisors is invaluable in navigating the intricate world of tax planning and wealth management. In this video, we've explored the unconventional strategies that billionaires use to save on taxes, revealing a world of financial tactics that many people may not be aware of. From leveraging business expenses and charitable contributions to utilizing offshore accounts and trusts, these wealthy individuals employ a variety of methods to minimize their tax liabilities. We also discuss the importance of investments, tax credits, and the invaluable role of financial advisors in crafting personalized tax strategies. While the scale may differ, understanding these strategies can empower you to make informed decisions about wealth preservation and tax efficiency. If you found this content valuable, we encourage you to subscribe to our channel for more financial insights. Like this video to support our work and share it with friends and family who could benefit from this information. Together, we can demystify the world of finance and help everyone take control of their financial future. Thank you for watching.